Hello and welcome again to Stocks Advisor. Today we will talk about very interesting company, AMC Entertainment Holdings Incorporated, traded at New York Stock Exchange, ticker name AMC. Well, why is it interesting? Because of the pattern and because of the situation we see here. It looks like a possible breakout forming, and if it is indeed the case, it could be a very nice runner. But if it will be a false breakout, of course, it might decline further a little bit, and then we need to be prepared because and we will take into account both, of course, options. We will be ready for both, because here you see, after having a period of a very nice growth, actually kind of a two-step growth that was observed from, let's say, May to June, mid of June, we saw a series of corrections, and the corrections were taking place with this supportive level. Let's call it R1, just for, let's say, better understanding first of what was happening here. And then what we saw further is actually that using this level as a rebound and moving average 20 as a resist line, as an attractor, this is the classical correction. Now this channel looks like is about to be pierced, because we see this very interesting combination that could be observed, and we are trying to bounce on it. We are forming a white candle here, a small, well, doji kind of formation, and after hours it's already plus 5%. That's the reason I was saying it's very interesting, because after hours we are just sitting very close to moving average 20, just below it and just above this upper line. So it could be a piercer tomorrow. If this is going to happen, it's a runner. If not, it will decline further to R1 or even lower. And that's why we need to take into account both in order to trade here. So how then we will buy and how we will trade? If it's a runner tomorrow, most probably it will be first pullback, because people will be selling after opening with plus 5. If this is going to happen, we want to buy those levels, and this would be just right here. These would be the levels to buy, but since this is still a bit risky, we will take it into account when we will be thinking on how to average down, how to buy. So first level would be to buy here 35, 53 and 38.50, hoping that it's a truly breakout and a runner. Then we can say the profit taking advice would be here from 15 to 20% overall from money allocated in the position, because for quick traders, let's say for more mid-term traders, you can wait even longer, because the areas to go are quite broad. The first test would be at 45, then the high we go, the next levels would be in the vicinity of 60. So it could be really, really a strong setup forming here. If not, well, it could be really a strong breakdown, and that would be the second technical level, the second, let's say, expected level where we can buy. If this is going to happen, we will go all the way to R1 and actually start defending here at this kind of knee formation that was observed by end of May of this year, and that would be our level to buy. Therefore, we will be buying within this shadow of this long white candle, and therefore these would be the levels between 26.50 at the bottom and 29.90. So this is kind of our second technical level and our defensive approach. And now let's write our call outs here. So the first one was between 38.50 and at the top, and 35.53 at the bottom. So this is our first level, and the second level is 26.50 to 29.90 as our second technical level to buy. And technical levels are the levels that we expect, because they can happen. First one, if it's a truly breakout and a runner. Second one, if it will be a false breakout and we decline. But most probably, well, both are quite probable, because if you look also at MACD histogram formation, we are about to go to positive area after forming double negative wave, so it's quite strong RSI is also quite good here, so we could be really growing, but we will see from trading action of coming days. And the third level we always take as a risk mitigation due to negative catalyst. This is the level that we do not expect usually, but it might happen if kind of a doomsday scenario take place. We have a bad news, company related, sector or market related. And how to mitigate those possible risks? Well, you just need to look at the very principal levels from where the price won't go lower. And these are here, and the classical correction patterns like that one. These are usually the levels in the vicinity of moving average 200. And here it will be just within this candle that was formed also by second half of May. Quite strong setup, and also moving average 200 by that time if we go there, we'll be crossing through that level and will form it as a double support level. So this will be between 1701 and 1953. Again, we don't expect this level, but we just keep some funds to buy through if we have let's actually kind of a negative catalyst and we go there. This way you don't lose money, because while others will be exiting with losses, you will be just buying there and then on the rebounds making your profit. And this is so-called a trading strategy with non-linear averaging down, where we do not play with any stop loss. Because what is the stop loss? I keep saying it in every video almost. Stop loss is when you buy your time with money. But because we trade on daily candles, we do not do intraday. We don't need the time to buy. We can just wait a little bit and buy bigger at the lower level. So this way you don't need to buy your time with money, but you buy your money with time. So you wait a little bit and you buy lower levels, and then on the rebounds you take your profit. But this will require you knowing those levels. That's why we discussed those, and knowing how to buy through. So how to buy through here, since it's a classical setup, so you buy with the classical 5 portion approach. What does it mean? It means that the money you would like to spend here, you can split in 5 portions. Then you can buy with 1 portion for the first level. If it's a false breakout and we decline to the second level, then you buy through that level with another 2 portions, and remaining 2 portions you just keep as a risk mitigation for the third level if any happens. So with this being said, it usually should be a very nice trade with a profit, or in the worst case scenario with a draw. So you don't lose money, but you spend with time, as I said. But because these are intradays and we are using this as either a big trades or as a secondary source of income, waiting a bit should not be a problem. That's why this strategy is not for intraday, but more for, let's say, through-day traders looking for secondary income, or indeed trading with a lot of money, because they also don't do intraday trading sitting at PC and watching like 15 1-minute candles. So with this being said, that's the strategy we choose, and the reason particularly why we choose it, because the people who seek for an advice in YouTube are usually those first 2 categories, either big ones or those who seek for secondary income. That's why I think this approach, this strategy is the best for them. And if you also like it, so don't forget to subscribe, press the bell button. This way I will know that you also like this strategy, so we'll prepare more interesting videos for you for US buy stocks. With this being said, good luck with AMC, and see you at another episode of Stocks Advisor channel.